I think it's worth pointing out that if an active manager is going to outperform, it's because his portfolios have tracking error. They deviate from the benchmark, and the arithmetic of tracking error is such that over shorter term periods, or even over shorter term periods, there's a very high probability of underperformance for that period. So clients really do need to be prepared for that. How do you define the long term? What is the appropriate period for measuring managers? Presumably, it's about trying to distinguish the skillful managers from the merely lucky ones. So the period needs to be long enough that you can be confident that you've identified skill, that good results haven't just been the result of luck. But how long is actually required?
That's a good question, Simon, and maybe we'll just put up a chart here to look at some of the data that we've come across. If you look on the left-hand side of this chart, this uses a couple of popular definitions of a market cycle. We would argue a full market cycle, and I think most investment managers really claim to be able to demonstrate their skill over a full market cycle. And the data shows that, again, whether you look at peak to peak or trough to trough of stock market performance, which is one popular measure of a market cycle, going back over history, the average market cycle is somewhere between 7 and 9 years. So that is reality. Now, if you look at the right-hand side of the chart, that shows perception. And here we ask two questions. We ask investors, what do you think the average market cycle is? And actually, interestingly, they say 7 years. So they're pretty close to the reality of what the data suggests on that measure. But then the second question is, over what period or what period would you tolerate an underperforming manager? Or at what point does it get untenable to have an underperforming manager? And that's where you get a somewhat surprising answer, and that's the answer there is around 3 years. So clearly there's a disconnect between the 3 years and the 7 years, because if most managers say they need 7 years on average to really demonstrate skill, but they're only given 3 years, you can see the beginnings of a real, potential misunderstanding between sort of agent and investor.